right, welcome to the daily market recap for Monday, November 3rd. In today's video, we'll be going over the action from the indexes, the liquid leaders, industry ETFs, then end the video with the long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, second day of a very large gap up, right into this resistance gap and selling right at the open. We did get a nice kind of bounce after the first 90 minutes or so, but just once again, sellers are showing up in this area and not getting a ton of traction. We are stair stepping higher and closing over the 5-day moving average, which is positive. But until we really clear this resistance gap on a closing basis, to me, I think there's just going to be a lot of chop in the market overall, and better to buy stuff on shakeouts versus on strength. S&P 500, similar action, still hasn't even gotten up to the gap down zone to test where the Nasdaq has. So the Nasdaq's been significantly stronger. Not really a shock, as most of the money is rotating into the mega cap tech names, and that's more heavily populated in the Nasdaq versus the S&P 500. But still, another close over the 5-day moving average, another bounce right at that support gap. So we've got our clear ranges of if we can break to the upside and close above, trend continues higher. If we break below the support gap in the 10-day, it's probably time for a correction. IWO, the growth stocks of the Russell 2000, lots of weakness this morning. Big shakeout of the 20-day EMA and the pullback lows. Eventually did turned back and rally quite a bit to close middle part of the daily range, only down 0.7%. And I think it was down like 2-ish% at some point today. So great to see the undercut and reclaim of the support gap here, but it is still relatively weak compared to the NASDAQ and the S&P 500. But as long as we close over that 20-day, over that support gap, still technically a risk on indicator for me. ARKK, also don't hate the action here. Took out Friday's low, then rallied back up to reclaim the 20-day, the 5 and the 10. Closed well, partly due to Tesla's strength, which is one of its main holding. And as of this point, this is just like a lot of chop, allowing the 50-day moving average to slowly catch up here. We've got the resistance gap above, support gap below. Those are the two ranges that I'll be watching for. And then switching over so we could take a look at Bitcoin and Ethereum. Bitcoin breaking down through the lows of the weekend, under the low from October 30th. So what we were kind of fearing with these multiple quick tests of the 200-day moving average does feel like it's starting to resolve to the downside. And after months of really not doing anything, we're starting to come under some pressure here with Bitcoin. Ethereum, even weaker, taking out the lows from every day except for October 10th. And you got all the key moving averages in a downtrend in the right order, except for the 200-day. So it does feel like kind of a 200-day test around 3,350 or so will be the next stop for Ethereum. So we've got risk on indicators with QQQ, S&P 500, IWO, and our ARKK over their 20-day EMAs. Some overhead resistance gaps in all those indexes, which is not a great sign. And then we have crypto breaking down. So some mixed action there. Now, when we go to the leaders, you could see some very, very good action. So while market breadth is weak, while we're starting to see some kind of warning signs pop up, NAAIM active investors exposures over 100% invested. So who else is left to buy? We're still seeing strength in the leaders. BE up another 7.7% today, closing back over their earnings close, which is always a good sign. MU up another 4.9% with a gap up in a doji close. SNDK continues to act extremely strong, up 3.9%. This one does have earnings on Thursday. Undercut that 5-day and Friday's low, and then rally back up on a big increase in volume, which actually isn't a great sign usually, but until we break to the downside, like that's just some churning there. STX up another 3.8%, closing right at that closing price from earnings. Palantir up 3.5% during the market hours, but then after the market, they reported their earnings and were selling off down to the gap zone right at $200 as of now. So What would that be? Down about 4.5% after hours. So we'll see how that gets resolved overnight and into tomorrow's session, but potentially the first gap down and some weakness in Palantir. NVIDIA gap up, rallied, couldn't take out the previous highs here, but still overall a very strong day, up 2.2%, closed near the low of the day, and near and still into that resistance gap. So a slightly stronger close tomorrow. We can get rid of that resistance gap, and chances are we just continue to trend higher while money concentrates into the mega cap names and leaves the rest of the market. AMD also has earnings, I think this week. Yeah, tomorrow after the close, up 1.4%. Nice tight action. A lot of the tight action charts that I keep flagging when I go through my universe list, I'm like, oh, here's a good setup, earnings. Here's a good setup, earnings. So some frustration there. Google, new all-time closing high today, up 1% back over their earnings close. And then VRT, only leader down today, down 0.8%, nothing notable, into that 5-day moving average and the support gap. Getting into the industry ETFs, you do see, again, that divergence between Wall Street and Main Street stocks. The Main Street stocks, we were promised in April, all right, Wall Street's had their turn. It's Main Street's turn now. That lasted 3 weeks, 4 weeks. And really, we're seeing a lot of weakness in like the economy stocks. So semiconductors still strong and acting honestly really well. Little gap up today. I love the churn while volume decreases over the 5-day moving average with a nice gap up. Until the semis break down, I don't think the indexes are going to. So that's a good sign overall. There's still a chance where money rotates out of the indexes into the rest of the market while the exposure is still high. So hopefully we see that. But today we saw a lot of smaller cap stocks and more like risk on names have those tight consolidations and then all break to the downside. So if I had to guess, I'm leaning more towards bearish price action. But we could take it day by day, use stops, manage our risk along the way. IGV software ETF, nice undercut of the support gap, bounce and reclaim the 5, the 10, the 20-day EMA. We'll see how this looks after Palantir's earnings. Solar stock, TAN, gapped up, opened on the high into that resistance gap, closed near the low of the day. Maybe just needs another pullback to like the 10-day to get situated. XLV, the healthcare ETF, continues to act really well. So we do see rotation into healthcare and healthcare related names still. Little undercut of the support gap, reclaimed that and the 20-day EMA. Um, XRT, big shakeout, closed flat. So hopefully that's like the last shakeout this needs before starting to shape up. But retail, again, the average consumer in America are just really struggling at this point, and we're starting to see it in those stocks. KWEB, the Chinese internet ETF, thought this would be acting better, honestly, with all the trade negotiations going on. Still below the 50-day moving average, along with the 5, the 10, the 20-day. If this can get back through that area, then this would just be another higher low as we consolidate in this handle, base, whatever you want to call it. But don't want to see continued weakness here. Let's see, cybersecurity, good shakeout of the 5, the 10, the 20-day. A lot of like quality stocks in that group. Zscaler, very strong today. CrowdStrike, still strong. And NET, the other stock there. Financials, still concerning action here. Gap down, open on the high. We did close nice in the daily range after a big washout in the morning. So hopefully this is like a higher low washout and then we can get going. But just another gap down, still below all the key moving averages. And it's going to be hard for like the rest of the market to hold up if financials are under pressure. XLB, the basic materials, just kind of looks like it's entering a stage 4 downtrend. Big volume coming out as we lose the 200-day moving average. PEJ, the leisure and entertainment, another reflection of the average like American retailer, below all the key moving averages with another gap down today. XLP very cleanly into stage 4 downtrend now, volume picking up as we continue lower, down another percent. Home builders down another 1.7%, losing the 200-day moving average. So we had this H pattern, and now that's playing out to the downside. And then even biotechs, which had been super strong, today undercut and reclaimed that support gap and that 20-day EMA. Something to watch for tomorrow as well. Before we get into long and short setups, just want to go over the earnings calendar because, again, we're right in the middle of earnings. And last week was all the mega cap stocks. This week and next week is all the growth stocks. So make sure you know when the stocks that you own or the stocks that you want to own report so you're not buying right before earnings and kind of gambling on that. After the close today, we had Palantir, HIMS, NVTS. That was down about 15%. HIMS was actually up about 5. So a little impressive action there. Palantir down. Tomorrow, before the market opens, we have Uber, Shopify, Spotify, Pfizer, Hut, UUUU. Those are kind of the main ones that I'll be watching for. NCLH, we'll see. Again, that's like a average consumer stock in my eyes. Are people taking vacations? Is the economy strong? We'll see how that goes. Then after the close, we got AMD, which has been one of the leaders in the market, ANET, which has been acting great, SMCI, which has actually been consolidating really well lately, ALab, Beyond Meat, Marathon, Upstart, Axon, and Pinterest. The rest of the week, I'm not going to go through every single one, just a lot of growth stocks and some key stocks to watch. So getting into the long setups, I didn't find I don't think there's like a single setup where I'm like, oh, that's an A plus setup that I have to be in. And to me, that's like another little sign that the market might need more of a rest, just because we had a bunch of quality setups coming into the day that I was really excited about. My first time through the universe list over the weekend, I had about 30 stocks that I flagged initially, and a vast majority of those broke to the downside. With that and NAAIM over 100% invested, with the indexes kind of extended going into all these earnings. And I think it's just going to be a really tough week if you're like a longer term swing trader or position trader, like trying to get positioned this week, probably not the right move. If you're a short term trader, you could play bounces, mean reversion setups, all that good stuff, in even short a bunch of stocks. But I think it's going to be a pretty choppy downward action this next week. But a couple stocks to watch. SoFi undercut and reclaimed the 20-day moving average on Friday as like a delayed reaction from earnings, little pullback. Really strong relative strength today, up 3.2%. Just looking for another test of that 20-day on a pullback into that 29 spot so we can manage risk against Friday's low. VRT, looking for this to pull back and undercut the 10-day EMA and support gap right around 186. Then get my stop under 182.70, the secondary gap zone, as the trade there. Biotech, this could have been bought today off the 20-day. Usually your first test of the 20-day is a great risk reward spot, especially if that lines up with a support gap, um, which is more useful on individual names than like overall ETFs, but still a spot to watch. If we can pull back, doesn't even need to take out today's low, but pulling back into that 108.50 area, then your stop would be under the low of the support gap. CLS has been acting phenomenal, just trading sideways after earnings, holding over that earnings close. I should have had that drawn. Pull back into the support gap, the high volume close from earnings, and maybe not tomorrow, but like Wednesday, Thursday, Friday, the 10-day moving average would catch up to that area. So you got three key spots to undercut and then reclaim as your entry. Then your stop would be whatever the low of the day is. Futu, one of the better acting Chinese names, right at all-time highs, and no other stock within that theme, within like the China theme, is near all-time highs. So this was the leader off the lows, the first to correct, and the first to get back over their 50-day moving average. Now, I would love this to just kind of chop sideways down, build out a handle before a break into all-time highs. So I've got alerts right around this 10-day EMA at 186 for a pullback, undercut, and reclaim buy right at that area. That would also be like a little breakout or pivot retest here as well. LAC and a lot of the precious metal stocks that exploded to the upside have been just brutalized to the downside. And at some point, we will get our mean reversion snapback. And the more we sell off, the better that risk return gets. And I think we're basically at that point now. This was one of the stocks that first it was rumored that the US was taking a position in it, and then that didn't happen. And then they did announce like a position. It rallied up from like $3 all the way to up to 10. And then you can go through the list, like UAMY, that was a great parabolic short to the downside. This would have been a great short as well from 1040 now all the way down to 5. After hours, it's down another 3%. So perfect scenario would be a huge gap down after hours, really force the late buyers here to panic out and sell for over 50% losses, and then have that snap back. I love the close under the 50-day moving average on a little pickup in volume as well. So anyone that bought on this first day is like very close to being underwater at this point. And that's what you want to see in these mean reversion setups. You want them to punish as many people as possible before snapping back. And the close under the 50, the close right near like the gap up zone, so where anyone would have bought that news, you're going to see a lot of pain. So that kind of capitulation, that kind of pain, um, will then reverse. And I'm just looking for like a play back up to like the 20-day EMA around 630, so like a 20% bounce or so. W actually holding up really well. This is Wayfair, gapped up on earnings, up 23%. Very steady pullback into the 5-day EMA. Nice shakeout under those lows today and then closed well. Through today's high would be buyable with the stop at today's low. Anything I'm buying on strength, I would be doing so with like very low position sizing though, just because of the market environment that we're in. So undercut and reclaim of the lows today was probably a better setup. So maybe a little pullback into that 5-day. Um, but still, like I wouldn't be piling into positions right here. GH, another healthcare related stock. This one was up 27% on earnings, kind of went sideways on Friday and then exploded higher today, up 6.3%. If the overall market pulls back, then a pullback into that high volume close right around $93 would be viable with a stop at the 5-day EMA. PL, nice shake out of the support gap and close well here, while other stocks within that group were pretty weak. So just looking for another pullback into the support gap right around $13 as an entry. Stop would be under the low from the October 30th pullback, 1250 as the trade there. We did gap down today, so I don't want to buy this on strength where there's potential sellers. So just looking for another little undercut of that area. XPEV, a Chinese equity that if we go to a weekly chart, you're not going to find a better weekly base here, like multi-year consolidation, then recently getting very tight, tighter, tighter, and even now a little pullback. This is one that I've been building into just every time it pulls back to the 5-day and the 10-day, right around this 2270-ish area. For me, nothing changes in the way that I want to like build into this position until we break to the upside with meaningful volume. So until that happens, the entry would be a pullback into that 5-day, into the 10-day area, and just continue to build with a stop under the 20-day EMA right at 2240. The last two also earnings gap up. So FLS, excuse me, up 31% on earnings. Then two consolidation days, pushing out of that area today. That was probably the buy point. It was on the watch list coming into the day. Just didn't take anything except for NUAI today. Really good action though. Closed at the high of the day. Just look for a pullback with market weakness into that 69 area. Then manage the risk against 67 and the 5-day EMA. An MIR, same thing. Nice move on earnings, up 18%. Now getting nice and tight under that HVC. A recapture of that area is buyable with the stop under, what would that be? Friday's low. On the short side, a lot of the kind of speculative names already have come way down off their highs. Even stocks that have bounced off the lows, they've already rolled over, like the quantum names. So I didn't find a ton of short setups, even though I kind of feel like the market is getting heavy here. That's okay. If the setups aren't there, we just don't take it. We don't need to do something every single day. But a couple that I'm watching, GDX, this was a really nice short into the parabolic top of gold, gap down, and did not respond when gold made new highs. GDX stayed heavy. And then we had that big gap down on October 21st. One thing you don't want to do is chase shorts. So when it came down to the 50-day moving average, like that wasn't a time to chase the short here. But now we've bounced up, consolidated, and then just a breakthrough today's low would be the short. You could also go long DUST, which is the double leverage inverse ETF of that. Stop at the 10-day EMA. Costco, nice bounce back today, but overall, this still looks like a stage 3 top to me, kind of similar to MMYT. Sorry, MMYT, little delay there. Big stage three top, multiple tests of the 200-day moving average, and then now in stage four or SFM that we talked about a couple months ago. Big stage three top, you lose the 200-day, and then it just waterfalls down. And I think Costco is right in that same theme. So I like the rally back up today. That means we don't need to short it extended. Just looking for a little rally up. If we could get a rally to the 50-day moving average, that would be ideal. Just another lower high of the 50-day. Then I would feel more comfortable sizing that up and then play it versus the previous high here at 952. Or a little uppercut and fail of the 20-day EMA at 930. That would be fine. It's a slower moving name, so it's not going to like blow your account out of the water either way. But uppercut and fail there, then stop at the 50-day moving average would be your trade. Carvana, this has been a monster stock. Went from $3 and what was it, 54 cents or so at the lows, all the way up to 400 at previous earnings. But we had the gap up previous earnings, only closed above that closing price like 4 or 5 trading days the entire quarter. Then started to build lower highs as the average American retailer got weak. We saw that throughout the economy. And then big gap down on earnings this past week, down 13%. But again, you don't want to short an extended name to the downside, especially in a strong market, which we're still currently in. The leaders are still acting well, indexes are still acting well. So you don't want to short extended names to the downside. Wait for them to pop back up like we got today, where it was up 8.3%. Now just looking for one more day rally up to that 20-day EMA at 343.50. That would be the entry, and then my stop would be above the resistance gap at 355. QBT, this is the weakest of the quantum names. So we saw RGTI roll over today. We saw IONQ stay weak. That has earnings on Wednesday. QBT earnings on November 14th. So a little bit of ways still. And if we just continue to see speculative names get thrashed, this is a name that already gave up its entire rally after the quantum craziness, where RGTI is up about 100% off its base, IONQ is up about 50% from its breakout. This is right back into that base area. So obvious relative weakness here. We'll just look for a little rally back to the 10-day EMA, right around $16. And then as you lose the daily VWAP, that would be my short entry. Stop would be at whatever the high of the day is. And then DAVE, this has earnings before the market opens tomorrow. This could be a long or a short. I think just it would be earnings dependent. It's just a name that's already made a massive move from $4 all the way up to $280 over the past 2 years. Feels a little bit later stage base. But this is only something that I would want to take on weakness. So if it gaps up, this is still a quality enough base to break out to the upside, and software names could reignite the rally. We get rotation from mega cap to software. So I don't want to short this on like a good earnings gap up, anything like that. Only if we get a gap down, like under the previous gap here at 223. Opening range break would be shortable. Stop would be whatever, like 2 or 3% over the high of the day is. Um, and you don't like this is another thing, like you don't need to short or go long earnings reactions on day one. You could wait for something like Carvana where it showed the hand that, hey, people are selling the stock, then we bounce back up and then we can get a nice tight entry. So you don't have to chase it down, but a little bit later stage base. We haven't tested the 200-day. Um, well, I guess technically ever. We've gotten close a couple times, but that would be a spot where I would look for like the pullback to get supported at. So that's going to be the daily market cap for Monday, November 3rd. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.